Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, July 15th, 5:05 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we are in an uptrend since May the 6th. Check the trend gauge over here. All for the green arrows. A little bit of more info needed, however. Green arrow for leaders, but yellow sub arrow as there's some rotation going on, new leaders coming in to displace old leaders. You want to be careful when that happens. You don't want to hold on too long to something that may be fading, and you don't want to be too late to move into the new things that are emerging. We pointed this out last week, and our weekend research and our team meetings, we all were pretty much seeing the same things. A ton of new names coming to the fore, and that is a result of the big rotation going on as we see some lagging recently on the big tech names and mid caps and small caps, and some smaller large caps starting to broaden out and breadth improving, and certainly bringing some new leaders to the fore. So all five of the major indexes are trending above their three timeframes that we track. That's the short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. For several days, we've had this yellow caution sign up here, and it's really directed at the NASDAQ 100, which got extremely overbought the middle of last week. I think it was Wednesday when we put it up. Thursday, we had the CPI report, and small and mid caps took off, and we had a big underperformance day by the NASDAQ 100. And it hasn't made a new high since then. Still over 6% above the 21-day moving average. I'm sorry, the 50-day moving average. And that's right on the edge of extended, so at risk of a further pullback from there. That level is normally 5% on the S&P 500, and it made it closer to 6 today, and by the end of the day pulled back under 5%. And again, the S&P 500 still driven, very much by these big tech weightings. So what happened today? Really, obviously, unless you live under a rock, there was an assassination attempt on President Trump, and I can't imagine what the state of the country would be right now had he not moved his head at the very last minute. On live TV, we would have seen somebody's basically brains blown out, and that is very unsettling. He obviously survived and picked his vice president today. Not going to make any more political commentary on that, although it does seem to be moving some parts of the market. And we'll get into that as we progress through the video. So this is day 3 today of the mid and small cap outperformance. Started last Thursday, and the third straight day of late fade by some big tech names. The S&P 500 and NASDAQ 100 were having a pretty good day till late morning. Then they had one leg down, bounced, and then some other harsh selling before a quick bounce the last 10 minutes. So this is really the third straight day that the S&P has made a new high, but not made a new high intraday, but not a new closing high. So that's something to be aware of. Possible wedge setting up there, and we want to be on alert if that falls completely out of favor. But we've had with 3 strong days up in mid and small, and they were very strong days. We have to be on alert for some reversal there as well. Day 3, chasing after day 3 is always considered a late, low probability chase. So here are the final numbers on the day. 2121 list, up 1.59%, 14 up, 1 neutral, 6 down. The big 8 up 0.5%. The RG8 up 0.9. Continued good action out of the RG8. Ted showed a composite chart of that, how it was breaking out last week in the podcast and on the Thursday video. S&P 500 up 0.33%. It opened up 0.4%, was up as much as over 0.8 on the day before fading. actually faded to flat and then had a late bounce. Equal weight lagged most of the day, but ended up positive 0.11%. NASDAQ 100 up about the same as the S&P 500, 0.25%. Equal weight slightly less. Dow up 0.5%. Mid caps up 0.6. Russell 2000 small caps cranking out a 1.8% gain. We don't talk much about the S&P 600 small cap, but it also is acting very similar to the Russell 2000 small caps. It was up 1.4% today. The difference between the two of them is there's a lot of junk in the Russell 2000. To be in the S&P 600, you have to have some profitability metrics for inclusion. Global 60/40 down 0.12%. This was a little bit of a spike up in interest rates, but also dragged down by weakness in foreign stocks today. Our flagship portfolio, GROTECTION, up a little less than 0.25%. Let's get into the charts, and we start off with the S&P 500. And you can see here, after making a closing high last Wednesday, we made a new high Thursday before the reversal, a new high Friday before the late reversal, a new high today before the reversal. Let's take a look at this on a 15-minute chart. So here's the breakout. Here's the gap up after CPI and the big fade. Very important level here, the low that day, 55.76, also corresponds over here about a 10-point range, 76 to 86. Rally up Friday before the big late fade, gap up this morning, rally in the morning, sell off, rally a bit in the afternoon, big fade into the close again before a bounce the last 10 minutes. So what we can say is that we're making higher highs and we are also making higher lows. If either of those situations change and we start making lower highs and lower lows, we will adjust accordingly. But for now, we're sticking with the trend. On the other hand, the NASDAQ 100, you can very clearly see, has not made higher highs over those last 3 days. Let's go to that same 15-minute chart. Right there was the last high before the big fade on Thursday on CPI. This low important right around 491. Here's the late fade on Friday. Here's the late morning to afternoon fade, and then another late fade today. We did make a new high today relative to Thursday, but not surpassing the highs from last week. And again, you can see the relative weakness showing in the chart there. Mild again because we got so extended. And that's the reason why we put that caution on the trend gauge last week, and it is playing out that way. But this is looking a little bit like a wedge triangle higher. If you go back to last Wednesday, so lower highs and higher lows. If this breaks, so something we're very much on the lookout for. Also need to be on the lookout for a false break one way and then a move the other way, as they can tend to suck you in and fool. It seeks to fool the masses. All you have to do is move one letter to make the masses look like something else. So another close above 40,000, and this is an all-time high close for the Dow Jones Industrial Average. So good stuff there, and some relative strength since the end of last week. S&P 400 mid cap. Well, that's pretty much self-explanatory. 3 straight strong days, made a higher high and then pulled off of it, closed in the bottom half of the range. So a little bit of fading there into the day. And again, third day up, buying, don't chase third day up or after. We always try not to. Russell 2000, clean breakaway, closed in the upper part of the range today, a little bit less than mid-range on Friday, top of the range on Thursday, and that was the absolute big breakout from this downtrend line, following through to the upside, massive relative strength in small caps. And again, this is all tied to the trigger was the CPI report last week and the reaction to that. So those are the 5 major indexes. Let's go equal weight very quickly. Here's the equal weight S&P 500, and not it still hasn't made an all-time high going back to March, but is showing relative strength over the last 3 days against the S&P 500. Again, that's more against the market cap weighted S&P, and again, that's more broadening out that we wanted to see. And QQEW, equal weighted NASDAQ 100, maintaining its breakout, but you can see it has actually made a higher high each of the last 3 days. And again, that's a testament to the breadth and the declining. Let's go to FNGS very quickly. This is the big 8 plus 2 other names. Under the 8 EMA, no higher highs, relative weakness for these 3 days. And again, that's probably the best reflection from a chart standpoint of the big 8. On to the VIX. VIX popped today. Still low, 13 handle, up 5% on the day. Dollar was weak most of the day, gathered a little bit of strength as the day went along, holding this 104 level and bouncing there. Gold. Got my things out of order there. Top of the range, pulled back from there, positive on the day, but faded from the highs as the dollar got stronger. GDX reversed from highs as well. Silver hasn't made highs. We still own a piece of this sitting on the 8-day exponential moving average. The big move is in Bitcoin. Trump is supposed to be one of the keynote speakers in a big Bitcoin conference. I believe it's next week. He's very pro Bitcoin, and the markets respond to political situations. When he survived, Bitcoin spiked. All kind of human emotion going on there, but it did. And I believe his partner is pro Bitcoin as well, JD Vance, his VP. So there, that's Bitcoin. On to bonds, BND. Tight range for 3 days on bonds. Prices down means yields up. Same thing with the long bond. Long bond, here's TLT, working on filling the gap. And the yield of the 30-year up 1.18%. Yield on the 10-year up a little bit less than 1%. So that's our inter-asset correlation. Let's go to the tail of the tape. Let's go to the tail of the tape. Here we are. All right, so talked about the news. Vary on the date count. We're all over the place between small and mid caps, the Dow, the NASDAQ, and the S&P 500. But we will stick with what is the S&P doing versus the 8 and 21, 10-day and 30-day up versus the 8 and the 21. Sectors today. Banks, oils, industrials, and financials stood out. To the downside, utilities really taking a hit, down 2.4%. Also, solar. This may be a reaction to an increased Trump presidency, similar to the way that oils were up, as that's his policies are more oil friendly than green energy friendly. But I also saw where Solar Edge is laying off a bunch of people, and that might have trickled through the sector as well. Uranium took a break, copper took a break, and as I said, foreign stocks and emerging markets lagged today. Portfolio. SMCI got its date for being added to the NASDAQ 100. It was strong overnight. It broke out of a range early. We added to it. It pulled back after that. Crowd was strong today, along with most cyber stocks, regained its 21-day moving average, and we added to that. Bought coin. We're trying to stick with, if we see a change in character on day one, big change in character, especially these are wedge pops is what you see. Coin had a big one today. We bought it, and Meta not regaining strength, we trimmed that. So that upped our adjusted beta from 1.25 to 1.39. Bottom line, for the third straight day, mid and small caps lead. S&P 500 hits an all-time high and fades along with big tech in the afternoon. All right, let's take a look at some charts. And some charts. Here we go. Let's go to the 21 over 21 list for this week. So I finalized it during the day today, and we're going to go in order of what has been on here the longest. And if we own it in our portfolios, it's got a green flag over here. We're going to start with NVIDIA. Going sideways, not exhibiting any relative strength at all for about 3 weeks now, since it had this what looks like a blow off temporarily, blow off high anyway. Big reversal on heavy volume on Thursday. This is when most of the big tech names pulled back. Very light volume the last 2 days, still holding the 21-day moving average. That's been on the list for a while, obviously. Apple reversing from highs. Uber bouncing at the 21-day moving average. Dutch Bros, after 2 rough days last week, bouncing at the 21. Coherent continues to trickle its way higher. Lilly as well. Palantir failed breakout last week, but all it did was pull back to the 8 and bounce today back above the pivot from its flat base. Datadog pulled back after 2 rough days last week, but holding the 21. AppLovin breaking this downtrend line as it broke off the 21. This is arguably a day one change after pulling back 5 of the last 6 days. Tesla with the big shakeout on Friday was strong most of the day, but faded late along with big tech. Trying to hold this 250 level back above the 8-day exponential moving average. SMCI broke above the shelf when we added early. It reversed hard, but still held the 8-day exponential moving average. GDX, new highs and reversed. Corning continues to work its way higher since upping guidance last week. Cameco, CCJ, uranium miner pulling back on very light volume to the 21-day and 8-day moving average. HIMS was added to the portfolio last week and the 21 over 21 list. So everything added here going forward is new. So you see Sims with the HIMS with the wedge pop day one change in character, regaining 21 last week. This was Ted and Connor brought this one to my attention, added it to the portfolio. Second day high off of that. ARK-K. We've talked a lot of smack about Cathie Woods. Big negative reversal on Thursday along with big tech, but it gathered itself and money seems to be flowing into more speculative names. We took a look at the top 7 in ARK-K and they look pretty darn good. And it made a higher high today. This is a breakout that's holding. So sometimes you cover up the name and look at the chart and make your judgment there and then decide if that's what you want to do. But it's also showing relative strength over the last 4 weeks as well. So we don't own it, but it's in the list. There are a couple other ETFs, and I'll get to them in a minute. Coin, we talked about how we added this today. Day one change in character, big volume, riding the back of Bitcoin, and strong with volume above the 8 and 21-day moving average. Weatherford oil stocks made a turn over the last couple of days. This broke out on Friday, made a higher high today with above average volume compared to the volume on the pullback. Nice cup and handle formation there. And oil services were strong today. We're going to close it with 2 ETFs that are benefiting from this new strength in mid and small caps. And XBI is one. Could also have IBB on here. You can see the volume. You can see 7 straight up days for biotech since it's bounced at the 50-day moving average last week. So this is a bit extended. We need a little bit of a handle here, but there are multiple biotechs working well. And the other is home builders. Pulled a little bit back today, but with the appearing pullback in interest rates or rate cuts coming, this had a big move on Thursday, added to it Friday, tight inside day today on lower volume on the pullback. You can see the volume on the move up. So there are a couple ETFs in there representing sectors. Sometimes we'll go with the sector we don't show the leveraged sector ETF because we make the decisions based on the underlying. But for XBI, LabU is a leveraged ETF, and for ITB, Nail is a leveraged ETF. And if we go with that, that's one of the things we'll look at. And that is going to wrap it for today. As always, like to hear from you. Oh, what do we got here? There we go. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, you can email my partner, Dan Stewart. That's dan@revereasset.com. Flagship portfolio is named GROTECTION. It has a dual mandate, that is grow assets during uptrends. By our rules mandate that we participate in the market. Forget about what we think about headlines or macro or political, geopolitical opinions. If the chart says buy, we buy. If the chart says pull back, we pull back. If the chart says sell, we sell. We're taking our technical indicators, and we're going to be participating in the market as long as we're above this big black line here. That's the 200-day moving average. That is the dividing line between a healthy market and a risky market, as all bear markets occur throughout history below this level. A break of this level doesn't mean that you're going to have a bear market, but you've never had a bear market without a break below it. For example, last October, we broke below it, but it was only for a couple of weeks. And then we kicked off this big November rally where we cashed a bunch of profitable trades in there and are still holding quite a few longer term buys from in there. And with that, I will wrap it for Monday, July 15th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.